Yeah, welcome to today's lesson. The essence of today's lesson is for us all to learn how we are going to be taking our entries. This is purely an entry strategy. Regardless of the kind of strategy you use to analyze the chart for a directional bias, this strategy is solely based on entry. Now, with this entry strategy, we are only going to be using candlestick patterns, which are order blocks, and we are going to try our possible best to refine order blocks so as to give us the tightest stop loss. Regardless if you are using a wide stop loss or a tight stop loss, the fact remains the same. If your zone holds, you are going to be profitable on the trade. But even if your stop loss is as wide as River Niger, if the zone doesn't hold, the market will stop you out and continue going against you. So now we need to know that the benefit of a tight stop loss is the fact that it allows us to have a minimal risk on a trade. Not just having a minimal risk on a trade, you are also able to trade on full margin if you are a very aggressive trader. So now let's say you are using a stop loss less than 10 pips, 8 pips, 5 pips. You are able to trade on full margin because your stop loss is tight. So even if you are scaling in with a very heavy risk, you are able to hold that trade. But now let us reverse the case. Let us say you are trading with a stop loss of about 40 pips, 50 pips, 60 pips, which is very wide. Your stop loss is not tight. So if you scale in on a full margin mode, before the trade even goes against you totally, you would have been wiped out and you would have had a margin call. So what should come to our mind is that how do we get a tight stop loss? So now let us take for example today right here, let us say that this order block here, we have a strong order block here, even though this is not a LD block and it doesn't meet all the criteria. However, it is also an order block. You have a grab of liquidity, you have an engulfing and a break of structure. So now as we have marked this block here, we are going to mark it. What do we mark? We mark the bullish block behind this bearish order block. So once we have marked it, what do we do next to refine? This is just an entry technique. We are not learning any strategy to have a directional bias. This is just an entry technique. So regardless of the kind of strategy you use, even if you use indicators, as long as you can have a technicals at your entry, we are going to teach you how to refine the order block and get a sniper entry. So you mark 50% of this block. Once you mark 50% of this block, if you are not still satisfied with the range of your stop loss, you move to a lower time frame. So now moving to a lower time frame, what do we see? We can see another strong order block in this zone, and yet we can do what? We can mark it. Once we mark it, just mark it. Once we mark it, we also mark 50%, and once we mark 50%, we have our stop loss. If you are not still satisfied with this stop loss and you feel that you still want a very tight stop loss, what do? You can scale into the 15 minutes time frame, which is the lower time frame, and you can also see an order block in this range. And what do? You can go even, you can even scale as low as the 1 minute time frame, and in the 1 minute time frame you scale lower to the 1 minute time frame to look for a sniper entry. Since we are not satisfied with the entry on the last time frame, so on the 1 minute, what do we have? I'm checking out the zone. I can't see it clearly. Is it here? I can't spot it clearly. Let's just go and check another order block that we're going to spot that is going to be clearer than this, because actually I can't spot this clearly. Okay, let us take for instance right here. We have an order block here in this zone. So let us say we want to refine it. You can see a market break block. It is another block, it meets all rules. And how do we refine it? We mark 50%, and once we are done marking the 50%, once we mark the 50%, and if you are not satisfied with the range of your stop loss, still if it is still wide, you have nothing to worry about. You just need to scale to a lower time frame. Let's go to the 5 minutes. Let's go to the 5 minutes. Okay, we can already see it on the 1 hour here. So now let us go to the 1 minute to refine it further. So regardless of wherever you see your order block, you can always feel free to refine it to get the tightest stop loss that you desire, because when you move to the lower time frame, the market will always give you a tight zone on the lower time frame. So there's nothing so special about you seeing people taking sniper entries. It's simply because they understand order block refinement, and they know that in the forex market time is fractal, and regardless of the time frame where you see the order block on a lower time frame, that order block is still there. So you go to the 1 minute. We are in the 1 minute here. We can see this exact order block at the perfect low that we marked. So we are simply just going to mark 50%. The reason why we mark 50% is to get a zone that is as virgin as possible, as price has already retested the whole order block. But when you mark 50%, you get a very clear zone. So now let's go back to the 1 hour. So we can see that exactly where we marked on the lower time frame, price lightly spiked it and moved up. Although this is not an entry strategy, this is just a strategy for order block refinement, as well as how to get a sniper entry. So you need to know that there are two kinds of order block. You have the engulfing and the morning and evening star. Here is a morning star. Do the needful to watch the videos on other blocks. Understand, this is a morning star. The evening star is the inverse. I also have the engulfing. When I say the engulfing, I'll show you. So we are going to take more examples on how to refine order blocks and scale down even to the lowest of time frames. Even to the smallest of time frames, you are able to scale down and get a sniper entry. Right here, we also have a shooting star. Just mark it. Right here, we have an evening star. So to refine it, as you have said, what do? We mark out 50% of this block. Mark out 50%. Before you mark the whole block, mind you, if it is a morning star, you mark this bearish candle before the bullish move. So that's what you mark. You don't mark the bullish, you mark the bearish candles before the bullish move. mark 50%. Once you mark 50%, scale down to a lower time frame. You can see it here. You can see the move right here. So you can refine further down. Hope you are following me. This is just an entry strategy to get the tightest stop loss and the lowest risk on the trade. And we further mark 50% again, and we can even go as low as the 5 minutes to look for more sensitive areas. If there is a strong order block on the 5 minutes, there is no strong order block, we can go to the 1 minute. Let's go to the 15 minutes. In 15 minutes there is none, so let's just ignore that. Let us go and refine more. Let's check for other zones where we can refine more. We can see this engulfing pattern. So now let us say that you have such a pattern to take your entry on the 4 hour. You can see if you are marking all these to take your entry, you will have a very wide stop loss and a wide risk on the trade. So firstly, you just mark 50%. Once you mark 50%, scale down. Which day is this? April 14th. You scale down to a lower time frame with 5 minutes, and let's go to April 14th to look out for the zone where we are going to refine from to get a very tight stop loss. So for me, I advise you use a tight stop loss because either the stop loss is wide or tight, it does not stop the zone from holding, neither does it stop the zone from going against you. Okay, you can see the zone here. Just zoom out. You can see no very clear order block on the 5 minutes. So if there is no clear order block on the 5 minutes, you can go lower to a lower time frame. Yeah, here we have an order block, and this is the zone here. So you just mark the zone. If you are satisfied, you leave it. If you are not satisfied, you can mark 50% more, but I guess this is enough of a zone. So let's go to the 4 hours. You can see this is the zone we have refined. So you have a very tight stop loss. So let's say price came to this zone, you'd have had a tight stop loss to have a greater risk to reward. But let us go to the 1 hour, April 14th, to see if we have another block. So you can see on the 1 hour, you could have just marked this zone and refine it from the 4 hour moving to the 1 hour. So you could have marked that zone, as this is not too wide of a stop loss. So let us move further to refine more, to learn more and understand better order block refinement and how you can incorporate it in your entry strategies for better entries. Because in the market, to get a sniper entry, you need to know the best zone you would want to buy or sell from. So now we have another block here. Let's say we want to refine this particular order block. So now we are going to have a top down refinement. First on the 4 hours we refine 50%, then we are going to scale down to the 1 hour as well. Mind you, this is not a strategy to have your bias, it is just a refinement method, so you can have a tight stop loss. You don't use this strategy to know the direction. So here we have an engulfing pattern and we just mark it. So if you are still not satisfied with your stop loss on this zone, you can scale down to the 30 minutes. So on the 30 minutes, you can see you have a market break block and you just mark 50%. So once you mark 50% of the zone, all you do is just wait for price to retest, and you can see how tight your stop loss would have been compared to having it very wide. So with this very tight stop loss, you would have even made much on this move rather than having a wide stop loss marking the whole block. So you can see from this range right here, we refined it to this range, thereby having the best possible entry and a very low risk on the trade. So now let's even calculate what the stop loss would have been. Having very low risk on the trade. So as you can see, this would have been less than 10 pips. So it's not difficult at all. Just take more examples to refine the method. So right here you can see an engulfing candle in this zone. So let us say you wanted to refine this engulfing candle and you mark it like this. So if you are going in like this, you have a very large stop loss on this trade. So you mark 50%, go to the 1 hour. So in the 1 hour, you can see there's a zone here. If you are still not satisfied, mind you, to refine it, once you go to a lower time frame, if there is no clear zone, don't mark it. If there is no clear order block, don't mark it. You can also see if there's no clear zone, don't mark it. You refine till you see a strong order block on the lower time frame. So you see a strong order block on the lower time frame. So right here we can see, so we have this order block here in this zone. So just to, if you are still not satisfied, you just mark 50%. Maybe you are looking for a 15 pip, 10 pip stop loss thereabouts, then kaboom. So you can see, let's go back to the 4 hours. So you can see how we have refined this order block to get a very tight entry, and you must be patient while refining, because when you refine, there are times when the market will not activate your entry and it will move, but a lot of times your entries will be activated, so you just need to be patient. So you can see you have saved a lot of pips here rather than marking this whole block. You can see how we refined it down. We can even go lower, as low as the 5 minutes, to refine it further. So it depends on how you want to have a very. So you can see on the 5 minutes, there's another block here. This is right here. I'll mark it and just mark 50% again. Just mark the 50% of this block. You can see price still came through. You could have imagined how tight of a stop loss you would have had on this trade with just the knowledge of refinement. So you can see how tight it is. Just check how many pips stop loss. You see, it's about 6 pips, and all this is possible just with the knowledge of refinement. So let us go ahead to take more examples. Let's go to silver. You can go to the 1 hour, you can scale down to the 1 hour. So once you see a very large candle forming around your pattern, you don't have to panic. All you need to do is just be patient, and once you are patient, you refine your order block and you try to get the best possible tightest entry that you are very comfortable with. And once you can do that, all you have to do is just wait for the market to retest and activate your order. Now on gold, for instance, you can see this order block here. This will be the last example for this class, although we are going to have more lessons on this. This will be the last example. Let's mark 50%. Now let's scale down to a lower time frame, and we can see the order block right here. And we can go down to the 15 minutes. If you are not satisfied, nobody is going to arrest you for refining your order block. You are the one who is looking for the tightest entry. So now we can see this order block right here. You can see this like a railroad track right here within the range of the 15 minutes. So it shows that the order block is healthy. Then you refine further 50%. So rather than you using the Fibonacci and so on for an area where price will retest, this is an alternative. It is simple. It is just simple order block refinement, and you can see you have a very tight stop loss. So even if your stop loss is wide, let's say your stop loss is as wide as this is what I'm saying. Let's say your stop loss is as wide as this or like this. If price reaches this zone and goes up, it doesn't mean that it shouldn't go up. As at the same time, it doesn't mean it shouldn't break this zone. So either your stop loss is wide, either your stop loss isn't wide, it doesn't mean that price will hold or whatever. So as they always say, that leave room for the market to breathe and whatsoever. If you know the right zones to sell or buy, you refine, you have a sniper entry, you have very minimum risk on the trade, then you wait for price to do its thing. So don't get bamboozled by those that say that you need to use a wide stop loss, because the wider your stop loss, the more the risk you are going to be having on the particular trade. So either your stop loss is wide, either it is tight, doesn't mean the trade will hold or it would go against you. Plan your trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, subscribe, share and follow for more.